Hello and welcome to Smaulgld.com. Today we're going to talk about SDRs or strategic drawing rights. We're going to talk about what they are, how they came into being, who owns them, who issues them, and what the potential future plans are for SDRs or strategic drawing rights. Let's take a look at some of the high-level facts about SDRs. They were created in 1969 by the International Monetary Fund. The purpose of the creation was to provide central bank liquidity for the expanding trade that could not be met at the time by dollars or gold. So let's flash back to 1969. This is before Nixon took the U.S. off the gold standard. So in 1969, the world financial system was operating under the Bretton Woods agreements. And under the Bretton Woods agreements, the central banks could bring their United States dollars to the U.S. Treasury and get gold for them. So in a sense, the dollar was backed by the gold. Now, the price of gold was fixed by Congress in 1934 at $35 an ounce. Guess what the price was in 1969? $35 an ounce. So the gold supply did not increase that much between 1935 and 1969 as much as the global trade did, but yet they were using gold as a reserve asset. And if gold was $35 an ounce, the added stocks of gold were not keeping up with the growth in the global trade. Also, there was a dollar shortage as well. So SDRs were invented at the time to provide central bank liquidity. They were there to backstop, not to backstop, but to provide another reserve asset like gold and the US dollar, because the dollar was the world reserve currency, and basically gold and the dollar at the time were interchangeable for each other. But that wasn't enough to supply the liquidity for the international trade. So they came up with a scheme, which is the SDR. Now, the SDR, as I mentioned, was designed to be a reserved asset, and it is based on the value of a basket of four currencies at the time: the dollar, the Japanese yen, the British pound, and now the euro. Okay, that's not the original one in 1969. But in the recent decade, that was the constitution of it. It was the value of a basket of currencies. It was four of them: dollar, yen, pound, and euro. And the dollar and the euro were about 40% each, and then of the basket, and then the pound and the yen were at about 10% each. This is prior to China joining late last year at the end of October 2016. Now, an SDR is not backed by those four currencies. And the reason it's not backed was if you had to back them by the four currencies, that would defeat the purpose of adding liquidity. Because if you had to take dollars and put them to the SDR and you had a dollar shortage, you would really just be swapping one place for the dollar and just putting it into the SDR instead of just using it normally as a dollar. So the genius of the SDR plan was they're not backed by anything. They are fiat representations of fiat dollars, fiat yen, fiat pounds, fiat euro, and fiat now yuan. Nothing backs the SDR. So when people talk about getting an SDR, there is no SDR. It is a security that is issued only by the IMF and only to the member banks. And the IMF assigns the member countries their SDRs in proportion to the size of their global economy. Then the central banks of the different countries hold these reserve SDRs, these assets, which are really nothing other than saying, here's a piece of paper and it's worth X amount of dollars, X amount of yen, X amount of pound, X amount of euro, X amount of yuan. Combine that together and that basket has a value, and that's what each SDR is worth. Only the IMF can issue these SDRs, and they issue them only to the member banks. There's about 300 billion SDRs that have been allocated to IMF members, so that's additional liquidity. So what they've done is they've basically fractionally reserved the dollar, the yen, the pound, and euro, and the yuan, which are already fractional reserve currencies, and then said, well, we'll roll up the value of those into a new security, the SDR. Now, SDRs cannot be used to buy goods and services. They can only be exchanged among central banks. There's no SDR note, there's no SDR coins, nothing. Now, what does happen or has happened recently is you can issue a bond denominated in SDRs, but that's payable in a sovereign currency like the Chinese renminbi. Last October, Chinese issued a SDR denominated bond payable in yuan. That doesn't mean that China is issuing SDRs. They're not. They're issuing a bond. It's just that the base price of the value of that bond and the interest payments of that bond are based on the value of the SDR, which itself is based on the value of the dollar, the yen, the pound, the euro, and the Chinese yuan. So as we mentioned, that was the situation with the SDR. We had those for the Japan, the pound, and the dollar and the euro in the SDR, and China was not represented, which was kind of ridiculous given they were the second largest economy in 2014, 15, and so on. So we're going to take a look at the SDRs by the numbers. I've got another, there are two blog posts. I will put them both up. One is called What Are SDRs? The other, that's what this one is, What Are SDRs? The other one's called SDRs by the number. And we will go through who owns what, the size of the economies, how much gold they have, how many SDRs they have, and so on. This blog post was written, I believe, in 2015, before the entry of China into the SDR. And as we mentioned, they were created in 1969, and they were designed to provide that liquidity. And it was basically they were going to invent a new security out of thin air based on the other currencies that were then in existence at the time. They couldn't get more gold at the time. The big gold producing countries in the world were Russia, but Russia was actually the Soviet Union during 1969 was not exporting any gold because they were behind the Iron Curtain. And the big geopolitical player at the time was South Africa, because they were providing the free world with most of its gold. And since the United States went off the gold standard, and also since the petrodollar became more important, Saudi Arabia is now far more important geopolitically than excuse me, South Africa. And South Africa has also depleted a lot of its gold reserves and doesn't mine as much gold as it used to. It's not even in the top 5, I don't believe, anymore. But in any event, let's take a look now. Well, let me just quickly show you. These charts are not up to date, but it just shows you that the SDR is priced. It's very easy to figure out the price. You take the basket of the SDRs, the different, and again, go through the percentages of who owns what. You take the percentage of dollars, the percentage of yen, the percentage of euro, pounds, yuan, and then you take the prices of those, you blend them together, you figure out what the price of the SDR is. And the SDR, basically, versus gold over the last 30, 40 years, has gone down. Why? Because the value of the currencies in the basket have gone down versus gold. All right, let's take a look now at SDRs by the number. So China joined. They were voted in November of 2015 by the IMF, and they just the weighting took effect October 1st, 2016. Now the yuan gets 10% of the SDR, and one of the reasons the United States, they say behind the scenes, was against letting China in is they didn't want to give up their weighting. Well, they really didn't. They took it away from the euro, the pound, and the Japanese yen to let in China. So the United States, that was probably a deal the U.S. cut, was to let China in. They weren't going to have their weighting of the basket of SDRs reduced. So Europe went from 37% in 2010 to 2015 to down to 30%, and the United States dollar remained virtually unchanged at about 42%. But let's take a look at some of these charts I prepared. Again, I prepared these. They haven't changed much. In December 2015, I just had not got around to doing a video on it, but let's take a look. All right. So here are the weightings of the currencies in the SDR, and the way you determine the price of the SDR is in 2005, you'd say, well, the United States dollar was 44% of the SDR, euro was 34%, the yen was 11, pound was 11. You'd figure out the respective prices, and you'd weight them according to the percentages, and that would give you the price of the SDR. And every 5 years, the IMF updates the weightings. So you see nothing really happened between 2005 and 2010, other than they upped the euro a bit, cut the United States back a bit, and then dropped the yen and the pound. Now, if you think about the pound being in the SDR, that's really a historical anomaly, because based on the United Kingdom's GDP, they really wouldn't be in the top 4 countries. But they're there. They have that role. I guess historically, you've got the City of London. A lot of gold is there. It's a financial center, so London, UK has stayed. But you can see now when they added China in 2015, the US really didn't go down. They went from 41.9 to 41.7. It was the euro that took the big hit from 37.4 to 30 to make room for the 10.92% that the yuan got. And then they shaved some off of Japan, and they left the UK alone. So adding the yuan to the SDR came at the expense of substantial reduction of the euro weighting. But let's take a look at who owns what assets. If you look at, so the euro is basically the eurozone, and now you're talking Germany, France, Italy, all those countries that are in the monetary union of the European Union. England is not. That's why you have the pound as a separate currency that actually is in the SDR. Sweden is not in. They're in the European Union, but they're not part of the monetary system. They have the Swedish krona, which is part of the dollar index. But anyway, let's get back here. So the eurozone has 49, nearly half of the gold of the SDR countries. The numbers I'm quoting are the official numbers. We're not going to get into a debate over whether they're accurate or not, whether China's are accurate. We've done that in other videos. Now, the eurozone has nearly 50% of all the gold, but only 30% of the SDR. China has 19% of the GDP, but its SDR weighting is only 10%. Now, here's the kicker. The United Kingdom has just 1.4% of the gold and only 5.4% of the GDP. Somehow they've got 8% of the SDR, so they're definitely punching above their weight. Now, the US has 37% of the gold, 32% of the GDP, but they've got that 41% SDR. So the United States and the UK basically are getting a bigger portion of the SDR pie than they actually have in terms of GDP or gold. Let's take a look at some more. So here is the gold holdings of the SDR countries. If you take the Eurozone, you take the US, that's that number they've had since the 50s. This is all the countries in the European Union. This is China. China is up a little bit higher than that right now. They're at 1842. It's a couple of years ago I did this. Japan is still at this number. UK is still at this number. US is still at this number. This number I believe hasn't changed. The only number that's changed on this chart is China. They've added about 130 tons of gold since then. But you can see the SDR countries do hold a lot of gold, especially when you take the top three. UK used to have more gold. They sold, another story, early 2000s. Brown's bottom, they sold a substantial portion of their gold at the bottom. So Eurozone nations have over 10,000 tons. US says it has 8,000. China 1,842. Japan 765. UK 310. So if you look at the total SDR nations, what they hold, 21,000 tons. That's a lot of gold in the SDR nations, supposedly. And if you break it down, as I mentioned, Eurozone has 50% of it, US 37%, China, this is People's Bank of China, 8% of it, and then small slivers in Japan and the United Kingdom. So 20,000 some odd tons would be approximately equivalent to the amount that the Indian households might have, probably the amount that's in China, but not at the People's Bank of China. So it's a substantial amount of gold held officially by these central banks. Now here's the total central bank hold, and you can see the SDR nations hold about 2/3 of all the gold held by central banks. I haven't updated this, but these numbers, one of the points I've been making over the past 2 years, no country is really adding or subtracting from their gold reserves China, since 2015, has added about 150 tons, but over the last 8 months, the People's Bank of China hasn't added any. It's really Russia and Kazakhstan that have been adding over consistently over the last 2 years. Kazakhstan for about 58 months in a row. Russia added 200 tons in 2015, 200 tons in 2016, 199, and they'll probably do the same this year, and only recently as the Central Bank of Turkey started adding gold. So these numbers, I didn't update the chart, but are pretty much where they were, meaning the SDR countries have about 2/3 of all the gold in the central banks. Let's take a look at the GDP. See, Europe has a reason to feel slighted because they have a larger GDP than the US, but they have a far lower percentage of the SDR. China, again, these numbers are a year or two old, but China's probably moved up a bit. Japan, UK, down here at 2.9 trillion, that is, yes. No, yeah, 2.9 trillion. Okay. And here are the total SDRs, 53 trillion worth of GDP. Again, you've got the biggest countries in there, or biggest blocks. You've got Europe, US, China, Japan. So this is why when people say that China's building out the Silk Road, and they are, and they're going to develop that into a zone. But right now, China does the bulk of its trade with its other SDR partners, the US, Eurozone, and Japan. Doesn't mean they don't have economic activity elsewhere, but that's why I insist that China has no interest, at least at this point, in trashing the dollar, crashing the dollar, because these countries, the Eurozone, Japan, and the US, they trade in dollars. China has dollars. So until this dynamic changes, until you see the Silk Road countries, the BRICS countries moving up. I do have another, I don't think I have it in this one, but I have another one, the BRICS by the numbers. Yeah, it's not on here. The BRICS countries don't approach these numbers yet. And if you strip China out of the BRICS, then it's really only Russia, India, Brazil, and South Africa. And Brazil and South Africa don't have that high of a GDP, nor does Russia. And India, surprisingly, for the size and the population, is also not that high. I'll put those up. Maybe I'll do another video on SDRs, BRICS by the numbers, and I'll update those charts. But you can see this indicates that the SDR countries do hold the bulk of the global production, and that's why China's in. They're also out with the AIB, but China needs to be in this SDR, in the IMF structure, because this is where they're making their money today. In the future, they've got the AIB, but that's all, that's, who knows what's going to happen with the countries along the Silk Road. Will they be able to get their investment dollars back? Will they be able to develop those countries by building infrastructure? Will there be a lot of trade? We don't know. So for now, this is the bird in the hand, or the birds in the hand. And this is just a pie chart showing, as I mentioned, that the Eurozone actually has the largest percentage of GDP. They have the most gold, but yet they only have 30% of the allocation in the SDR. And then here's what I was saying. The total global GDP are at 77 trillion. The total SDR is 70% of the world's GDP. So even if China decided it was going to say it's not trading with the US, not trading with China, Euro, not trading with Japan, not trading with the United Kingdom, well, they'd lose 70% of the world's market. Take them out too, but the point being they don't trade with themselves. So the point being is this is where the world's economic activity takes place. Well, thank you very much for listening. If you have any questions, put them below on the SDR. I'll try to update these charts. I'll also try to get you the link below on the SDRs, the BRICS by the numbers, so you can check that out. If you enjoyed this, please give it a thumbs up, share it, like it, subscribe to Smaulgld, subscribe to Smaulgld.com, subscribe to Smaulgld YouTube channel, follow us on Twitter, and also consider purchasing your precious metals through the Smaulgld links. Smaulgld gets a small commission. Compare pricing and shipping. Consider opening a Coinbase account if you're interested. You'll get $10 worth of free Bitcoin when you buy $100 worth of Bitcoin, and Smaulgld will get $10 worth of Bitcoin. And also consider buying a Ledger Nano S wallet to the Smaulgld site, and also consider becoming a Smaulgld patron. The links are all below, and you can donate via PayPal. via Bitcoin and Litecoin. Again, links below. And none of the information here is investment advice, either to buy gold or silver, or any of the information that I just went over. So please do your own research, and thank you very much for listening.